Welcome to Steph's podcast. Thank you so much for listening in every single week. As you guys know, I have a different guest who will come on the show and talk about all things ADU, all things multifamily, all things real estate investment strategies. And I'm very selective of who I have on. These are very highly vetted individuals, highly experienced people who have a lot of knowledge and a lot of value to bring to you guys every single week. If you have someone who you think might be a good fit for the show, make sure you guys reach out to me. And another way to stay connected, I know that some of you guys are listening in every single week on the podcast, and you may not know that I do have my active YouTube channel where I'm always sharing other sorts of tips and tricks on what I'm actively doing on myself as an ADU strategist and consultant and investor. And then also, make sure you guys reach out and follow me on Instagram, Steph Sells ADU. I constantly have different content on there showcasing a lot of what the strategies that we're talking about on this podcast, whether it's midterm, ADUs, multifamily, acquisitions, you name it, just property management, mom life, all the things. Make sure you guys follow me on there so we can continue to cultivate this relationship. Now, enjoy this episode, and I'll see you on the next one. Hey guys, welcome back to my YouTube channel, my Spotify channel, and this episode, episode 85. I have a very special guest today. His name is Jared Jones, and we're going to kick off with his bio here because we got a lot to talk about. As you guys know, every single week we're talking about all things real estate, all things housing, all things ADU, and all things intentional living. When I bring people on, I'm very mindful of who I bring on, the information that we're going to give to you guys. Highly vetted individual here today, and I'm going to share with you guys a little bit about Jared. Jared is a real estate investor and entrepreneur with over 20 years of experience in sales, investment, and development. Since 2008, he has owned and managed rentals. He's flipped more than 450 properties and closed over 1,200 transactions across multiple states. As the co-owner of Power of Two Realty and Middle Housing Partners, Jared has developed over 600 doors and oversees private equity ventures specializing in build-to-rent, micro-developments. Across his companies and partnerships, he manages more than $200 million in real estate assets through a fully integrated platform, which I'm really excited for him to share. Spanning from architecture, engineering, construction, the whole nine. He's basically integrated everything and has, been able to create a model to scale this. And I'm very, very excited to have him here today because we got a lot of information that he's going to share with us today. A lot of you guys who have heard the episodes, you guys know I've talked about ADUs. We've talked about some bills. So most of my audience is pretty up to date about the ADU strategy, right? We know that it's a strategy that works in today's housing market, but now we're going to kick it up a notch and really talk high level 2.0, 3.0 strategies that work that Jared's currently implementing out in the IE or, other parts of SoCal as well. So I'm very excited to have you, Jared. Thank you so much for being here. Tell the people anything else that I might have missed in that bio, because it seems like you've done it all, but, I'd be curious to know, how did you even get to that point? What tapped you into real estate to begin with?
Yeah. Well, first of all, that intro, I'm sure that my team provided that to you, but that makes me feel a little embarrassed. No, I mean, it sounds like a lot. And look, to your question, I started out. I kind of fell into real estate. My family had owned a little bit of real estate, and I had heard about, owning assets like that for a bulk of my life. But I had a friend in college that was telling me about his buddy that was young like us, killing it, a few years older than him, making a few $100,000 a year. I'm like, whatever that job is, that's for me. That sounds like the one I need to have. And then got into doing lending and got my license to sell homes, and then the market crashed. And while everybody that I was in the business with was used to this really big high, like they were riding on the crest of a wave. Um, and then it crashed. And so their world was falling apart. And I was just coming into the business and I was like, whoa, like there's a lot of opportunity here. Like, yes, now everybody that owned houses, and my wife and I owned one at that time too. Um, but like they feel like they just lost the world. But the reality is there's a big opportunity here. And everything's on sale. And so taking that frame, I started selling homes to my friends. I started selling homes to other people that were interested in investing. And basically just word of mouth for the first, basically really my entire career until about the last 2 years. Like it was 95% word of mouth kind of business. And so flipping houses, I did know that I should keep some of them. And so I was doing that, trading in and out of state as the markets changed in Southern California. 16 is when I really started doing a lot more stuff out of state. And then fast forward to 2021 and the ADU laws got pretty strong.
Mm-hmm.
And I had some rental properties. I'm like, well, shoot, like, I don't need that garage that much. I don't think my renters care, right? So we converted a garage in Hemet, and we were the first application under the state ADU law in the city of Hemet. And they came back and they're like, well, yeah, that's fine, but your fees are going to be $38,000. And I'm like, wait, what? And so right away, like in January of that year, like we already had a fight with the city of Hemet. And so we were ready. And I had done a couple ADUs on flips that we had done out in Highland Park. And so I was kind of familiar with that and tons of construction experience with the flipping. And so in my mind, first of all, I was like, well, that garage isn't going to cost me very much to do. And so wanted to do that. But I also knew what fees I had paid out in LA for the ADUs. I'm like, I was like $3,000 in fees to do an ADU. There's no way in hell I'm paying $38,000 for
Right.
fees. And so it started our fight, and then it worked, and they came back and they're like, oh yeah, I guess you're right. It does have to be reasonable fees and blah, blah, blah. So cool. And then when we were in the process of that, we, were comping out all the rents and everything. And we're like, oh shoot, this is a cool opportunity. And so all of the investors that I had worked with over the last 10 years or 15 years prior, that owned rental property, I just started calling them up. I'm like, hey, I know that 3 years ago or 4 years ago, we moved you out to Nevada, or we moved you out to Idaho, but this is better than that. And it's in California. And so literally we just started taking our investors' money from Idaho and Nevada and Utah and pushing it back to California. And so we created interest from our current people. And then, about a year in, we were like, we've got 70 to 100 of these things going right now, like total doors that we were creating. And so we brought in a partner to help us run that construction. We got our GC's license. And so we just started through the process of looking at this as a much bigger opportunity than just the hack for my garage. And so that's kind of how we ended up in this space. And then now it's grown into something much, much larger.
It's huge. Now it's insane. I remember probably during that time you could build an ADU for like 50, 60 grand. Now the average cost, I was talking to a client yesterday, a garage conversion is roughly around 120 to 150,000, right?
Mm-hmm.
And now with laws like AB 1033, once you're able to sell off these ADUs, and most cities opt in, which will most likely happen. I think we'll see a lot of that next year. then if the valuation on these properties is going to go up, what do you think is going to go up? The construction, the labor, the build out, and probably the fees, but maybe not, because I know thanks to HCD and the law itself, we are protected, and the fees hopefully will remain the same. But, inflation and all these other things that play a role are, yeah, the cost is going to go up. So I think
Yeah.
one thing that you said and by the way, guys, I met Jared in person not that long ago in San Diego at the ADU Forum, and we had an amazing conversation. We have a lot of mutual friends in common because we're in the same ADU world. And he was on stage speaking, and he mentioned something, which was, you said the land right now is for sale, just like it was back then, right? When you were
Mhm.
talking about the 2008 crash. And I think you seeing that, in today's world was because of that experience that you experienced back in '08. So you were able to spot that, and you being able, I mean, you even talked about being able to buy properties on the MLS. And I try to tell investors all the time, like, you don't always have to wholesale the deal or find it off market. A lot of these opportunities are on market. They're in front of your face. They're on Zillow, they're on the MLS, and you just have to figure out like what works, right? How is it that this land is still on sale even with market rate, right? And it's because we're going to get to the bill stacking and the good stuff, but it really comes down to knowledge, experience, and seeing the vision of what works in today's world. And I think you've really mastered that, but a lot of it comes through the experience. So when investors think about doing something like this, we were talking about this offline, it's not as easy as people make it seem. You really need to have a very, very strong team to help you execute in a timely manner, because the time really does kill deals, and you lose a lot of money along the way. So we definitely want a big disclaimer on that, right? It may sound easy, and the strategies we're talking about sound like they can get done, and they can, but with the right team, and that's very important for sure.
Yeah. I mean, there's a big difference between simple and easy. Right.
Hmm. Right.
So, like, the concepts are very simple to understand. And one of the things that I've had to do when I'm out raising capital is I've had to break it down in a perspective that makes a lot of sense for people. And one of those frames that I use is, yeah, we just build apartments in backyards. That's what we do. Like, well, ADU SB9, what is that? Well, it doesn't matter. It's an
Right.
apartment in a backyard. And so that thought process it's very easy to understand. All of the ways that the laws work together, how you run your utilities, or am I going to pay impact fees? How does that affect my project? What is the timeline for approval on SB9s versus ADUs? What are my setbacks? What are my restrictions on height? Blah, 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 blah. Like, I could speak about that for 45 hours straight. I would
Mhm.
filibuster on that, you know? But um
But people want to hear like the sexy stuff. They don't want to hear the
yeah,
feasibility, and they don't want to hear,
yeah.
utilities, which is a big,
No,
big deal.
but well, people want to hear the sexy stuff. Like, I feel that. I do too. Like AI, like I want to know all about it. And I use it every day. But how much pain do I want to go through to implement it to become an expert? That's a separate thing.
Right.
And I believe that there is actually never anything new. There are innovations, right? But success still always does look like execution on opportunity, right? And so
Right.
it's like, you want to be successful at it, you're going to have to figure out how to execute on this opportunity. And then the scale of the opportunity is the thing that determines how much it's going to return to you when multiplied by your execution. That's it.
Hmm.
Like, and so it's always, so this is not a hack. This is a shift in concept, and a change in the way that zoning and building are done in California. But it's not a hack. Like, this is a business, and there are people that will become billionaires off of this business. And there are multiple people that will become multi-billionaires off of this business. But ultimately, it's a ton of hard work and a ton of knowledge. And really, the people like yourself that dive deeply into the laws and build the teams to execute, it's like, great, I want to work with Stephanie. Well, super awesome. There's only one Stephanie,
Mhm.
in your city or whatever, you know what I mean? And it's like, so that there is this thing, like, if you want to be very successful at this thing, then you've got to be Stephanie. Like, you got to go out and do the painful work that Stephanie has had to do to get in that spot, or leverage Stephanie, like, and then make it worth it to Stephanie to do business with her. And so that's kind of the thing that I started out in this as a hack, right? Like, this was like, oh, that's kind of a cool thing. And then we just leaned into it. And then because we pushed so much into it very quickly, we painted ourselves in the corner that there was nothing else we ever were going to be able to do except for build our own resources and dive more deeply into it. So, yeah, we have a ton of knowledge now, but that's not how it started, you know? And
It's not how it started, and not to mention, you have all these other roles that you've done in the past: property management, development, flipping,
yeah, yeah.
construction, the whole architectural now, the engineering, like
Mhm.
there's a lot of different roles and a lot of different hats that you've worn in the past that have helped you, right? The lending
Yes.
background that have
100%.
helped you structure the vision now, because
Yes.
you know how to underwrite a deal, you know
Mhm.
exactly what that ARV is going to look like. Now, understanding law just amplifies all the other hats that you've worn in the past, and it all comes full circle in real estate. But that's one thing I love, because I started off as a receptionist at a Century 21 office like 15
Yeah.
years ago. And now, I'm really trying to dive deep into advocacy work and law, because I understand that that's a position that most people aren't willing to take, right? Most people aren't going to be like you and I, diving deep into legislation and trying to figure out, what the rules and regs are and how we can build accordingly. And so, yeah, a lot of people will not take that time. However, they can leverage people like us in the field, and it's important to distinguish who has good intentions and who doesn't. And one of the things I love about you is you're so passionate about it, about housing, and about really like truly helping people and helping investors. And one of the things we talked about in our side conversations is you're always being proactive on how you can give them those returns as quickly as possible to get them going onto the next project. And that takes a lot of leadership, because you got to make sure that the team is kind of backing you up with your pitch as well, right? And those
Yeah.
and meeting time frames. But before we get to that stuff, I want to kind of help people understand middle housing, and then also teach them a little bit about private equity and how the two meet, because that's the theme today is middle housing meets private equity, and we're able to scale that. But just tell people a little bit about middle housing and why it's such a hot topic right now.
Yeah, so I mean, there's a few things. I literally had this conversation this morning with my wife and our trainer, because he asked me that. He's like, "Well, what is middle housing?" I said,
Hmm.
I probably should pull out a dictionary, but I'm not going to. Middle housing is specifically workforce housing. Like, it is the housing that houses the people that run our communities, that run our lives, right? Like, and so back in the 70s, middle housing represented a ranch house in on a 7,200 square foot lot, because ultimately you with the median income could go out and buy one of those as a one income household. That's crazy. So that represented middle housing. And then luxury housing would be like your move up buy at that time. That would be your 2,500 square foot house on a bigger lot. Well, today, what middle housing looks like is housing that the people that live there can afford. Like, we're providing that product for them. And so today, that's ADUs,
Right.
that SB9s, SB 1123 or 684, and we're going to talk a little bit more about that. But it looks like townhomes and smaller apartments, and things like that, that you can make the median income in Riverside of $88,000 and afford to buy one and afford to stay there and not have it suck up your entire life. And so that's kind of my best definition for middle housing. And middle housing today, like I said, represents those things. But in order to achieve middle housing in California, specifically, the suburban sprawl that we've created as a state, it looks like leveraging backyards. It looks like reimagining the spaces that already exist so that we could tie into existing infrastructure and do it cheaper and faster than if we're trying to expand out on the outskirts and build another 50 units, So that's today where I see a lot of the vision going for the ability to use what's already sitting right in front of our faces,
100%. I mean, I think middle housing, it almost, to try and remember it, and when I explain it to clients, is middle housing, think of housing that caters to the middle class, right? Which back then, people could probably afford, on average, right, with their median income, a duplex, a triplex, townhomes, small 4 units. That's kind of what falls under the middle housing bracket. But nowadays, like a new couple, or let's say young investors who are looking to tap into today's market, they can't, at least in Orange County where I typically work, average price point for a single family is 1.1. So for a duplex, you're looking at like 1.4 minimum.
Yeah.
There's
Yeah.
no way that you can tap into that market. So now looking at a single family home, looking at the type of zoning, looking at the lot size, the FAR, you may be able to turn that one door into three, or if you're able to afford buying a duplex, you can now turn that into four, or even scale it even more, because I know you're going to share a little bit about SB 1123 and SB 9 and 684 and how those kind of overlap when you really want to maximize density at
Yeah.
scale. But just talking to the average, investor or homeowner who's looking at maximizing density, nowadays it's a lot trickier, and so you do have to use the ADU law to be able to scale it or even be able to tap into it to begin with, right?
Yeah, absolutely. And my argument to people is because a lot of what we sell against is apartment complexes, right? Like
Hmm.
that's the opportunity. They're considering an apartment complex investment, or they're considering an investment in what we do. And one of the things that I like to say is like, our returns are not actually better than apartment complexes when you look at how much it costs to build a thing and how much value you extract from it. So if I invest in an apartment complex, and this kind of goes into the return conversation,
Right.
but like right now, a good apartment complex deal, I'm going to put my 100 grand in, and then they're going to tell me, we expect that you make 20% internal rate of return on that deal. So that basically, I'm going to make 20% on my money over a 5-year time frame that I have my money tied up. Well, the value extraction from that was created that gave me my 20%, it's not significantly different when I build a unit in a backyard. The difference is, instead of taking 5 years to get through that process, I can do it in one. And
Hmm.
so then technically my returns are 5 times higher than the apartment complex. Now, I also have learned, so for any of you investors out there that are looking to raise capital, you can't say it that way, because people don't expect to see, well, I'm going to make 70% on my money. Like, they're going to think you're a liar. It doesn't make sense, right?
Right, right.
But the point is, I would much rather be in the position of running 10 projects at 3 doors in a backyard uh, at a time, using the same pool of capital. And so say that gives me 10 deals instead of one apartment complex.
Hmm.
But if I get to use that same pool of money 5 times before they're built, I make more money. I was safer the whole time. And like it creates a more meaningful impact on my community. And I care about that deeply. So I do think that that this is actually like where we were going. It's not just like the hack into the market. I think this is the new market.
I agree with you 100%. It is a new market because one of the things that you talked about when you were up on the panel was, well, how do you guys source these deals? And you're like, they're everywhere. They're on the MLS. So, what is it that you're looking for when you're looking at these properties besides the lot size and your average, typical criteria? Like, how do you go about implementing, 1123 and 684 and SB9? How do you determine maybe for this specific lot and this zoning type, it may make more sense to just implement two of the three or one of the three type of thing?
Yeah. And, what one of the things that you kind of talked about earlier is like having a lot of experience in this industry in life in different parts of the business
Mm-hmm.
um, has also set me up for success in this. But another piece of that, though, is Malcolm Gladwell in Tipping Point talks about 10,000 hours,
Right.
right? To become an expert. And we've got it. Like, we've got a lot more than 10,000 hours in this space. And so, to your question, the answer is not always the same. The answer is contextual. And so it's like, in this neighborhood, I'm probably actually going to do something different than I will do in that neighborhood. And determining that is most deeply about knowing my market and doing some research. If I don't know my market very well, um, and then just figuring out like from the easiest frame that I look at it, it's like I want a big backyard. I'm going to put 3 units there. It's totally fine. Whether I can achieve parking or not is going to determine whether I want the project or not, depending on the neighborhood. So the other piece of that when I'm looking, so like the quick and dirty answer, the easy answer is I need a 2,500 square foot backyard to pick up any deal. But I'm really trying to find 4 to 7,000 square foot backyards, like really good size ones, so
Mm-hmm.
I can create a product that is going to be very attractive to people. That was not necessarily my first iteration of fourth unit in a backyard or whatever, but that's where we're at today. So, um, but then the other thing that I'm always looking at is what city am I in? How quickly can I turn my sets of plans in those cities? And if I can go vertical in 4 weeks because I'm in the right city, I am going to give that a high priority over a deal that's 2 cities over that may be a really great deal. Like, I got a 70,000 under market value. Well, who the hell cares if it takes you another 7 months? You
Oh
know?
my God. I
And
just talked about this in one of my other episodes. Like
yeah,
it you actually because someone asked me like, well, what type of zoning or where should the property be located? Should it be a corner lot? And I'm like, you could do a corner lot with alley access, the whole 75 square foot, whatever. But if it's in, for example, here in LA, Compton or Watts, like worst cities to work with. But if it's in Long Beach, right? I will take that deal because Long Beach has a very streamlined process. So yes, that's exactly right. Like you don't look at the property itself, you look at the location, you look at the city and how streamlined the process is within the
yeah.
city. That's what's going to save you time and money ultimately.
For sure. And,
Yeah.
now we're in the perspective of capital markets, like, and so, like, how do institutional investors want to give you money? So it's a different thought process than when I first started. But one of the things that I will say is our experience only comes through pain. Like, so from that perspective, like, we've had the shit beat out of us for the last 4 years over and over and over again. But what's happened, and we've lost millions of dollars to make a high multiple on that. Super great. I just expect it. Like I know that there's going to be pain now. Like I did not that there's been a lot of growth in the last 4 years, and so but there are people out there that are ahead of you on whatever path you're on, and there's people that are way ahead of me. And one of the things that Beast says that I really like, I've heard him say it a few times now, but is um, that consultancy is a cheat code.
Mm.
Like somebody else, when he went out to build his chocolate brand,
Yeah.
um, and he figured out that he wanted to dive into sustainable, like child labor free chocolate.
Hmm.
Um, what he did is he went to the company who was the current biggest provider of that kind of chocolate, and he hired them, and he learned from them, and he had a vision that was much bigger than their vision, and which is amazing. Like he wants to get the whole chocolate industry to change the way that they source chocolate without child labor, but he can't do that from the frame of just some famous YouTube guy. What he has to do is he has to step into this position where they've now taken notice, and they're like, oh, this guy's now selling $1 billion a year worth of chocolate, and he's doing it without child labor. That's the shift. And so what I'm saying to people is he had this bigger vision than the best person in the market. And so he's going out and operating that because he has this big goal. And so, no matter where you are at on the scale of what you're trying to achieve, there's somebody out there that has bigger goals than you've ever even thought of. And if you want to level up your goals, those people are there and they can help you. And so, I do think that that's an important thing that I wish I would have told myself 4 years
Hmm.
ago.
Yeah,
Um,
and you're right because every time I see his chocolates, I haven't bought any, but I am tempted because I know that it's not just only good quality, but it also has, a mission and a purpose behind it
yeah,
too. So
yeah,
and yeah, partnering up with somebody who had a much bigger vision and was also able to help him in that specialty. I mean, Hermosi talks about it too. You pay for lessons with either time or money, but you're going to pay for it either way. Like with you, right? You guys have obviously had those pain points and those growing pains that you guys have experienced, but those were really investments in the long run. I think, more than
100%.
the, yeah, you're where you're at now because of those failures and just getting punched in the face, especially with Hemet on those fees. Like, oh my God, now we do have it a little bit easier too, right? We have HCD, so if you have issues with any cities, which you shouldn't at this point, but it sucks that we still have to, kind of work with certain cities and educate them on the process itself, which is a whole other thing because you're not just dealing with robots or automation, you're
Yep.
dealing with people behind the counter. And so now we have HCD to kind of help us streamline the
Yeah.
process, getting on people who aren't doing what they say they should be doing or following the state law. But it wasn't like that at the beginning. It wasn't like that in 2017, 2018. I think in 2020 is when things started getting a lot better. And in these last 2 to 3 years, things have, really taken off. And I'm really happy, like where we're at right now in California as a state, pushing the ADU wave and kind of following lead with what Oregon is doing and what Washington is doing. You're a big fan of Thatch, and I think
Yeah.
you also see the vision of what he's been able to implement and do out in Seattle
Yeah.
is something that we're also doing here, right? And
Yeah.
so with that, I do want to get to the good part and share with people because those returns are insane, right? If you
Yeah.
guys missed that, I don't know if it went over your head, but
Yeah.
I mean, comparing your returns on an apartment complex on a 5-year term
Yeah.
versus a 12-month turnaround time and then multiplying that 5x. I mean, yeah, I don't know if people miss that, but that's the hack. And how do you get there? Well, one thing that Jared has really been able to master is SB 1123. Let's start there because a lot of you guys have heard about SB9, which is currently also being modified. But we've heard about SB9. We've heard about SB 1211 is one I've talked a lot about. in these last couple episodes. But SB 1123 is kind of like this hidden gem that not a lot of people, at least that I know, right? And I'm very involved in the space, are really like creating a niche somewhat out of it. So yeah, what is SB 1123?
Yeah, so SB 1123 is actually the third iteration of a law that allows you to do townhomes in California. And so it's basically statewide small lot subdivision. So um, basically, the one of the things that I love to say is like the shock value is single family zoning does not exist in California anymore. It's not here. It's gone. And this is actually probably the best permutation, however you say that word, of that law, right? Or of that concept is that if you have a single family zoned lot and it's a 6,000 square foot lot, well, right now you're allowed to build a single family and some ADUs on it, but you still have the size restriction on the lot unless you're going to live in one of the units. And SB 9 allows you to split it in half and put two duplexes. That's cool. But SB 1123 allows you to turn that into a 10-unit development. Now, it's interesting how they build these laws on top of each other, but 1,200 square feet is the minimum lot size for SB 9 if you're creating a new lot. Well, it's also the minimum lot size in a single family zone for a 10-unit development if you're doing, one of these projects. So on a vacant lot, that's what it allows. And then
You said
on
10 units.
10 units, correct? And then if it's a multifamily lot, then and actually I'm gonna reverse out of that. I wanna correct myself because it's not just multifamily. If it is a lot that allows more than one unit, so that could be mixed use, it could be commercial with an overlay zone that allows for housing. So people are using parking lots. Like there's lots of cool ways to do this, but you can do a lot split and add an additional 10 units to whatever you have. So if you got a 40 unit apartment complex and you got a big lot in the back, no problem. Slice it up, add 10 more townhomes, condos, or essentially, some sort of apartment type units on that lot. So it's a densification rule that allows you to do townhomes. And the cool thing is these are all separately sellable. And so that's the goal, is to create this middle housing build to sell product. Now, HCD's come out with a letter that I disagree with. I haven't fought with them on it because it doesn't matter yet for me.
What does
But
the letter say?
well, it says that the units need to be for sale. They're conflating the meaning of shoot. What's the name of the way that they say it in the law is that they have to be not separately alienable, fee simple. So they have to be fee simple lots. Well, that in the letter that they created, they said, well, it was a technical assistance letter to HCD in Oakland over a few different issues. And one of the things that they asked is, does it have to be build to sell? And they said that it does, which they are not right. But the reason they say that is because, and they reference that verbiage that it has to be fee simple lot. And like, great, fee simple doesn't mean for sale. Like,
Right.
that's a conflation. Totally fine. Don't really care because that's a whole separate issue. But the point is they can be. And so capital markets are very attracted to a product like that because now we're not talking about 1 or 2 or 3 units. Now we're talking about 10. And so the other thing is the way that this law is written really kind of allows you to put up properties in a way that normally zoning wouldn't allow for. It's like, oh, well, you need a 20-foot setback. Like, well, actually, no, it's 4 feet. and
Hmm.
no setback on the front lot if it's prohibitive of the kind of project that you have. And if they don't have a floor area ratio in their zone, you get to build up to 1,750 square feet, regardless. If you need to go 5 stories, that's fine. Like, so there's lots of really cool stuff that's in there that people, that we're just going to have to figure out, you know? And so when we saw that, we were already raising our first private equity fund, and we're like it was a big deal. And so we may be a little bit myopic, and we have when I sign this contract here in the next couple of days, we'll have like 36 of these going, or 34 of them
Amazing.
in the next
And
little bit.
all within, I know you're mainly in the IE and you're specifically focusing on certain cities that have a streamlined process. So where are those scattered?
Well, right now, no cities have a streamlined process for this.
Hey,
They do
yeah,
for
yeah,
ADUs and
right. For
SB9s. Yeah.
ADUs and SB9, they do, but for
Yeah.
this one
So
particularly, they don't.
our project mix right now, we have a couple in LA. So we have one in Inglewood, one in Pasadena, and then we have one in San Dimas.
Okay.
We have a few in Corona. Um, Actually, ironically, none in Riverside. We have a couple in Moreno Valley, um, and then we have a lot in Redlands right now. We have
Okay.
quite a few. Um, and then I know there's other cities that we have that I can. Oh, actually, no. One of them is in Riverside, and it's a really cool project. That's the one that I need to sign still.
Mm,
Um, but that's 6 lots, and because it's 6 lots, where I would normally only be zoned to do like I don't know 20 units or something like that on the whole thing, we're able to achieve 60 units, and so that's really cool.
hmm.
Um, but yeah, so that's what we see, and everybody's seen a townhome before. Like this is not a new product. The only
Exactly.
difference is where do I get to build it, and how quickly do they have to approve it, and what are the rules that I get to use on a setback.
Mm,
So the easiest way that I get to explain this, because you referenced Thatch earlier,
right.
and I was just with a group of guys from Oregon this last week that do some similar stuff. The difference with them and us is California's laws actually are the best laws in the nation now, not even close, because their laws only apply to certain areas, certain demographic sizes, like, and or they just haven't aggregated all of the things together yet. So
Hmm.
there's projects that we can achieve on a single family lot where we're able to add another 13 units. How do you do that? Well, you have to do a legal lot split first, which is not as fun. That
Right.
takes a little bit more time, but then you still, when you're done, you get your 10 units and you get 3 more units on your main lot. That's really cool. The thing is, with the scalability, I can know what I can do in Inglewood, even though I mainly operate in Riverside, and I can know we have projects up in
In
Oakland that we're working on.
Pasadena too. Yeah.
Yeah. And
Mhm.
so like we know what we can do in those markets, even though it's a completely different area. And so being able to pre-underwrite a deal across the entire state makes the scalability very, very good. So that is one of the things that we're seeing with 1123 is we have some investors that have come in to our fund that are very attracted, and they're
Okay.
giving us like little tiny seed capital compared to what they can invest, because as they see these projects come full circle, like they're going to dump big money into it from my perspective, you know. And so
Yeah, of
anyways,
course. If you rinse and repeat the process, I mean, they're going to want to reinvest that capital, right? And with SB 1123, because cities don't have a streamlined process, what does that time frame look like, and what are some of the hurdles besides the setbacks and the height restrictions and other things that they want to implement or kind of push back on? What is it that you're seeing?
so far the so we're working with HCD right now on a couple of them, And that's back also to, I expect that now, right?
Mm-hmm,
Before
mm-hmm.
it's like, no, why are these cities doing this? I'm like, oh, no, you don't understand. One of the things that I have learned, and Alex Hermosi says this all the time, is the hard stuff, like this pain that we get to move into. It's not a bug, it's a feature. Like anything that's really worth doing, that's very massive and scalable, like it's not going to be easy. Like
Right,
that's your job. Stephanie makes money because she does stuff that's not easy. If it was easy, then anybody could do it and Stephanie wouldn't make any money. Well, that's fine. Or she would
right.
make a lot less money. And so, um, that being said, one of the things is just kind of misunderstanding of how this law works. So if there was a house on there on the property, um, then a lot of times they're like, well, it's not eligible because there was a renter in that house. It's like, oh, no, no, that's not what that means. Like, first of all, the way that the law reads is if your project requires you to demolish a unit um, in order to build your units and it has been occupied in the last 5 years, no go. Like, that's fine. But what that doesn't mean, the property or the law allows for you to create a whole bunch of new lots. Well, when you're creating a lot, for anybody that's familiar with that, the original APN stays with the current lot. And so that's what they call a remainder lot. And so you're allowed a remainder lot with this 10 unit development law. So all you have to do is you create lots all around that one lot. Your APN stays the same. Now you have 10 more lots. You didn't have to demolish that unit that was a rental in order to create product on it. So that's one of the things where we've got a TA letter that we're working on right now that's a
Okay.
little bit confusing. And then the other one actually is on a project that we got a TA letter on last week. And when I say we got the letter, it was sent to us from a previous letter that had been issued. So it wasn't ours, but that unless a city has a floor area ratio, they cannot apply any height limit to you. And so it's tricky because the way that this law is written, it's like, hey, you can't create a SB 1123 ordinance that restricts you to anything different than the zone. So that means if they don't have a floor area ratio in their zone, they
Mm-hmm.
cannot apply a floor area ratio to your project. So it does say in there that they have to allow you to achieve at least 1,750 square feet on average. So if they can't apply a floor area ratio unless it's on the project, and so you've got no floor area ratio, then your height restrictions no longer apply because you can get 1,750 feet. So if I've got a 600 square foot lot, how many stories can I build? Well,
Right.
4, 5, depending on. So anyways, that's something that the state weighed in on. We were thinking, oh, we're going to have to wait a long time for it. And they're like, actually, there's already a letter on this. Boom. And so taking that in and using that with the cities, that's a big one. But there's going to be a lot of these things over the next year. And a lot of our friends that are doing some of these or about to do some of these, they're kind of taking the position, okay, we're going to do a couple of them and then we're going to see how it goes.
Mm-hmm.
And our mantra now is let us drink from the fire hose because we learn the fastest that way. And then those aggregated gains that we have from that painful experience of our first 30 some odd deals, we
Right.
know exactly what to do on the next 30 deals so that our returns are even better and we go faster. So those are kind of a couple of the things that we see, but we expect a lot more pain.
And that's good, right? Like you're expecting it and you're
Sure.
prepared for it, because that takes me to the next topic, which is operations. And one of the questions that someone was like, you need to ask Jared was, when it comes to scaling, what's more effective? And I already know what you're going to say. Is it building an internal team or partnering with operators who already have systems in place, or a little bit of both, really? Like,
Yeah, and so I think that that there's multiple answers to that question, and I think that there's a difference between incremental growth and scale, right? So if it's like, hey, I'm doing 400 units a year, and I want to get to 600 units, okay, well, you can bring in some more people to solve that,
right,
right?
right.
But if you want to go from 400 units a year to 4,000 units a year, you are not going to scale internally. So the answer is yes, all of the things.
Hmm.
But then I do believe for us to ever get to, my goal is very audacious. Like the
What's your
things
goal?
that
Let's get it out there.
well, no, look, I want to get to a point where our company is able to achieve 15,000 units a year, which would make us the second largest production builder. Um, and I mean, right now, 28,000 units was the highest builder in unit count last year. That's not state, that's national. And so, the reason that I want to achieve that has nothing to do with Lamborghinis. It has nothing to do with beach houses. It has to do with providing the value to our market that it needs. And so, from that perspective, when I look at this thing, I'm like, well, I definitely cannot grow my team internally that fast. When I'm solving for that problem, but in order for us to get to that position, we have to have a very deep understanding of how all of the things work. And so to get from A to B is not the same to get from B to F. Like they're different things. And so um, I do believe for the first part of any growth for these micro development companies that want to pop up, the way that you do that is internal. I think you have to own that. If you would have told me 4 years ago that I'd ever be reading laws and more importantly, informing the way that laws are written in my space, I'd tell you that you're out of your mind. Like now I'm like, that's my lifeblood. Like
Right.
I need to know it better, not than just my city, but also than HCD. HCD needs to call me and ask me what I think about it.
100%. I
And
agree.
so
Hmm.
once you can take that ownership and not assign it to somebody else, I can't do all of the tasks, but the team that I have are very invested in this, and they're also equity holders in it. But then also like from a perspective of being able to figure out and how to choose like the next people that do help us to grow further, you know, that we need to know very deeply what we do. So I do think that internal is very important. Um, but there's also like internal and how many reps can you do, right? It's like cool, like I am a fit person, I go to the gym every day and that's like super cool. All right, so like what kind of weight are you lifting, right? Like and what is your goal, like where are you trying to get to? And so I do think that some of those things are very important, but definitely we didn't have the budget at the beginning to bring on an employee to do even our plans. But then we were 100 projects in and we realized we paid over $600,000 in fees, or
Right.
$600,000 in fees to our designer. And we're like, oh, that's like a staff of a lot of people. What are we doing?
Right.
And we didn't like his plan sets. Um, he was fire hosed to the phase two, so he could not be very accountable. Follow up
Mhm.
systems weren't there, and so we were able to build that off of volume that we had already created. So, but definitely
Yeah, so
being
I guess it depends like where you're at, right, in
yeah,
your journey. Starting off, you definitely want to maybe leverage other people until you're able to build that internal team. And
yeah,
then at some point, even build that internal strong team, but leverage
yeah,
other connections that you have. And I agree with you. I think one thing I'm focusing a lot this year is the law. I mean, I geek out on this stuff with Andrew and we'll talk offline, and he'll send me another newsletter or another bill update, or just something new, right? And because my main focus is to understand the ADU law and understand other bills as well.
Yeah.
Dive into it, because the profits are in the policy. The operations and all that, and the systems and the people are great, but if you know the knowledge, you can get these projects to the finish line, and you're very capable and very confident about your ability to be able to do that. So when you're talking to investors who want to trust you with their capital, you can get to the finish line, because yes, you have the amazing team, you've built the systems, the processes, but most importantly, you're staying up to date with the law, which is the hardest part, is what most people just don't want to tap into. And you don't really have to. You don't have to take on that role, right? I think
Yeah.
you don't have to. There's that's why it's a team concept here, team effort. If you
Yeah.
have the capital and you want to leverage it, you want to get some returns for X, Y, and Z purposes, then you may be better off just handing it off to somebody who has, who's doing this full time,
Yeah.
and then rinse and repeat the process. You don't really have to like overcomplicate it either.
For sure. And I have that conversation with people a lot, and it sounds self-serving
Hmm.
where like, look, honestly, for what you're trying to achieve, you're gonna be better off just giving me your money. Because even if you got as good as I was 2 years ago after doing a couple hundred of these,
Right.
like the amount of gains that you're going to have to make to be able to meet what I can return now, you're going to have to hit a lot of very lucky streaks. And that's just not really the way that it goes. And time kills deals. Like we know these things. And so, but I'm not competing like when I'm talking about dollars, like, and people are interested in making an investment in what we're doing. I'm not
Hmm.
competing against myself 3 years ago. I'm competing against myself today. It's like I can consult you on your project and good luck. But from a time perspective, unless we are making equity, I don't even have time to do your deal. Like it's not even a thing because
Right.
we have so many things that are going on within our own system that we partner with people. But outside of that, like I'm not looking for individual investors that I can sell a property to and help consult them through the process. That
Right.
is 2 years ago. That is 3 years ago. And it's great. And if I were still in that position, I would do the same thing. But
Right. Because
that,
that's what got you to where you're at
yeah,
now.
for
Right.
sure. And so there is no shame in any of that, but it's also just not the position I'm in anymore. But for somebody that's doing 4 ADUs or 10 ADUs a year, even, like I would love to, make that challenge, like show me like how you're going to consistently make more returns on your money than what an operator that's doing hundreds a year and that's building to rent, so they understand all of the
All of it.
little niches,
Hmm.
how you're going to beat those returns consistently. And then also, what was your life worth? Like how much of your life did that suck up? This is the only thing we do all day. And so I would much rather go and play golf with somebody where we're getting to play best ball. I'd rather be going golfing when I'm playing best ball with the guy that is on the course from 9 to 5 than the guy that goes every few weeks,
Right.
And so
Right.
that's really what I see. Like I get to drop my ball wherever this guy hit his best shot. And that is the beauty of the investing in an operator and investing in somebody that this is very myopically the only thing that they do. And they
Right.
do it over and over because their ADU muscles are getting pretty big. And even when you find a lucky deal, like you also have to have the lucky plan set and the lucky contractor and the lucky management company to make it all really work out similar to the way that they could make it work out. And from a safe, high return investment perspective, I have never seen an opportunity like this
I
ever.
was gonna say. I was gonna
And
say.
I grew up in the market of the post Great Recession era, like so yeah, we found awesome flips and lots of cool things. Um, but
And I'm sure the flips taught you a lot, but you also, yeah, I don't want to say outgrew that mindset, but to some extent, yes, right? Because you were
yeah,
trading your time for money and you're like, well, shoot, if I'm going to be flipping it, might as well keep it, right? Or like, might as well
yeah,
sell it. It just doesn't
that's
make
right.
sense because the time and stress that I'm sure you went through working with contractors, trying to meet the timelines and pay the investors for a 20%, 15% markup, it's like, was it really worth my my stress? Same thing when it comes to selling property, right? Like
Yeah,
I'm a realtor as well, and I try to also tell realtors like figure out ways where you can partner up on these deals. And ADUs in multifamily, to what your point, what you were saying earlier, is I agree with you. I don't think that any other state has better ADU laws, especially when it comes to multifamily,
yeah,
like California. So when realtors are selling properties, like you could be, partnering up with some of these multifamily investors and
yeah,
become, that ADU consultant, or figure out how you can get sweat equity in the deal. Now
yeah,
you're a lot more invested and committed,
yeah,
right? In the
for sure.
outcome versus just selling it for commission or just building out the ADU or adding more square footage and doing the renovation for a flip,
Yeah.
profit. Yeah.
Yeah, and to that point, that's how I cut my teeth, is by partnering up with people,
Hmm.
doing deals with my investors. What I will say about that, though, and I see that this a lot in the real estate industry specifically, but if you are going to try to extract value, you need to bring a lot of value. And
Hmm.
so, really, there has to be this value differential where it's like you are bringing more value than you are receiving. And as long as that's the case and you set proper expectations, your pool of money is limitless. With those people, they will continue to invest in you. And so, what I do see a lot of is people that are like, "Well, I want you to cut me in on the deal, but well, okay, what are you doing?" Well, I just,
I
I
just
told
selected
you,
you guys.
yeah,
I just
I
picked
I told you that we could do this, and all, and so,
yeah.
like, so I absolutely believe in building money through partnerships, and leveraging your knowledge. Just go get it. Get the knowledge. We have a community where we teach other people how to do this and how to
Mhm.
scale those businesses, um, called Micro Development Mastery. And we have probably, I don't know, 40 or 50 people in that community, but it's very
Sign me up.
specifically focused on this.
You'll
And the
have to
thing
sign me
is,
up.
yeah. Well, and the thing is, like, we bring those people in, and I don't know what it's like 5 grand or something like that we have. But the thing is, like, when we look at it, like, if you're going to be an operator,
Right.
like, we are operators, and like at the moment, we don't even really make any money off of this. It's a way for us to give back and build partnerships with other people and like community in a space that we believe very much needs to exist, not just for the benefit of the operator, but for the benefit of the community. And so we're deeply committed to that. And so, but at the same time, when we hear like, oh, I don't know, that's a lot of money, and it's not saying it's not a lot of money, especially for people that are starting out. But then I'm
Mhm.
like, look, I literally will get on and tell you how to avoid $100,000 loss, or I'll literally tell you how to structure a deal where you can make another 150 grand on the deal instead of making 2 grand, because I've done that. I've done the 2 grand and it
Right,
sucked,
right.
but the 150 grand, it's all right. I don't hate it.
Mhm.
And so that's the kind of thought process, though, where um, there, and there has to be deep comfort in the level of value that you have to give to your people before you're actually like making a good fair trade. And
Yeah, and I'm
there,
sure those 5,000 are, I'd probably pay more than that. Like I have Alex in a investment mastermind group, and he's
yeah,
only 12, but he gets to meet with other teens once a week, and then Saturdays they have book clubs. But it's 5,000, and when I saw the what they have access to, it's I would have paid double that, triple that. Like, I'm investing in my son's mindset. Like, nothing beats that. Nothing.
100%. It
And
is the biggest investment we have to make.
yeah, Alex Hermosi talks a lot about that too, right? Investing and paying for access. So when
Yeah.
people, like the mastermind group that you have, you're not just paying the 5,000 for the knowledge, you're also paying for the access and the people that you're surrounding yourself with, which is what helps you expand your mindset. Like when I
Yeah.
first got started, I would do feasibilities for garage conversions, started doing that with Cameron. Now we partner up on deals, and we each have our own role, in the deal. But hanging around with people like Andrew and hanging around with other people in this space helped me go from garage conversions to SB 1211, looking at 8 units, 20 units, 50 units. And, Andrew does even bigger projects than that.
Yeah.
But being in those circles, I value that a lot. And I will
Yeah.
pay for access because yeah, it's so worth it. I mean, the ROI is going to be 50x because
Yeah.
of you just tapping into that knowledge. 100%.
Yeah. And absolutely. And so, from our perspective, like, oh, Sharon Sravista, who,
Hey, I'm a huge fan of him. Yes.
yeah. And so we know Sharon through some other different things. But like, the group that we've paid in, we paid to be in that group that we were in, Wealth Without Wall Street, just to go hang out with Sharon. And so we flew across the country. We've been to a few different events and we've gotten to know him, and he's amazing. We joined the brokerage that he was at just to have access to him.
Mhm.
I've spent hundreds of thousands of dollars on these mentorship kind of programs, and yeah, look, in our community we have content that we've created that's like um, updated course material. When new laws come out, we always talk about it. We help people underwrite their deals, but the biggest thing that I can download to anybody is the breadth and the scope of the opportunity,
Mhm.
and then how we have handled going through the pain of, it's like, well, this is my first deal. How do I raise capital? Like,
Right.
well, let's look at the deal. Let's figure out how to frame it. And those are the things that I wish I knew. I didn't. A major portion of the reason that we do this thing is because we wish we could help 4 years ago ourselves. Like
Right.
Brian and I, my business partner, like, we look back and we're like, man, we wish we knew that earlier. And I really can't give it for free. But if somebody wanted like a full on mentorship right now, and they're like, well, I want to spend 2 hours a week with you and I want to do this. And the truth is, you could offer me $200,000 and I just wouldn't be interested, because when I look at the amount of time that I have to put in that, in the deals that I'm involved in right now, and the income that comes from those things,
Mhm.
focus on those things. So I, and there's deals that we get every day that return much higher in equity than I could ever receive from that kind of stuff. And so what I want to do is I want to deliver a disproportionate amount of value to the person that gives me their money, period. That's always what I want to do. And so I can do that in a mastermind community. It's very hard for me to do that one-on-one unless I'm equity partner with somebody. It makes it a very difficult thing for me to achieve. And I never want to not be living up to what I'm bargaining to do. So that's important to me.
That's why I really enjoyed our conversation that day, because I could tell, you have different conversations in these events with people, and a lot of them are very surface level, a lot of them are very business oriented, but our conversation was also very emotional too,
Mhm.
and I respected that because that's when like people are really passionate about what they do and they want to make an impact, and they have a much bigger vision than it all being just about the money and the profits. Like, that's going to come when you learn how to solve high level problems.
Yep.
That's just going to happen automatically, like by default, but
100%.
yeah, it's just well, maybe we can create a book club on the government code and have like
I love it.
yeah.
I would get my business partner Rob on that book club.
Yeah.
Who out of everybody here understands the law. Rob and I are the ones that have dove in the deepest into the understanding of the
Mhm.
law. Um, of my business partner, I was telling somebody at a kind of another mastermind that we were at a couple days ago, about like, she's like, well, how did you get started? And like, how have you, and I was telling her like, well, you just have to get the reps in and whatever. And Brian's like, hold on, Jared's not going to tell you this thing that I'm going to tell you. She's like, Jared has a deep passion for this thing. And so when I go home from work, I shut off and I'm done. Like, Jared goes home from work and it's 10:30 at night and he's texting us over these cool ideas or new laws that he just discovered. Did you read it this way? And the truth is, like, for the first time, I'm probably going to be emotional here.
Yeah.
Um,
That's a
but for the
lot.
first time in my entire life, I feel like I'm really in the spot that I need to be. And I'm very passionate about the thing that I'm doing. And so, from that perspective, like, I want in my life, like when I'm aligning with people,
Hmm.
like, I like Alex Hormozy, very attracted to that guy, right? Like,
Right.
Sharon Shrivista, these people, but they live and breathe what they do. They think about it deeply all the time. And I want to make a bet on those people. And I want to be that person in my space. And
Hmm.
I can't program that into somebody. But
No.
if I want to bet on a horse, like, I am going to bet on the horse that has that kind of energy and that kind of passion about the thing that they're doing, because you can't beat the shit out of them enough to make them stop. They're
Right.
going to keep going, And so, I heard this a little bit ago, um, and I think that this is like kind of the way that I would like to close this off. There was a study, and it's a little bit grotesque, but it was done on mice. And they dumped a whole bunch of mice in water, and they would tread water for about, I think it was like 7 to 15 minutes or something like that. Um, and they would drown. But then what they did is, at about like a minute or two before they would normally drown, they pulled them out of the water, and then they put those same mice back in the water, and they were able to swim for like 72 hours after that. And the difference on that is they had hope. They were looking into the future, saying at some point I might be able to get out of this circumstance. So the psychology that we have surrounding the things that we do, like, if we're like, well, I just want to do 2 a year, well, great, you'll probably achieve 2 a year. But
Hmm.
when you have that person that has hope and goals that are far beyond what they could ever achieve,
Pushing past their limits. Yeah.
that person's just going to keep swimming and swimming and swimming and swimming. And so that is the thing that I think, for anybody that wants to be the cycle breaker in their life, right? Like,
Hmm.
you want to be the one that they'll talk about 4 generations from now. And it's like, dude, there's my great 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 grandmother Stephanie. Like,
Right.
she changed everything. Like, my family was doing these weird things, and now, like, look at, I just graduated Harvard because, the endowment that Stephanie set up or whatever. And so, like, for the people that want to be that, or even just change their daily life, like, that's the thing. It's got to be far ahead of you.
You have to be
And
a visionary. Yeah.
and being able to lean into those things is the power. And even if, you aren't that person, totally fine. Attach to a person like that and believe in their vision and support them and be into that growth mindset with them. There is much power in that. But, like, there's so much good that can be done through this opportunity. And some of that's money, right? Like, there's money in this, but
Hmm.
there's also community that gets built when we get to put more people in the space that they grew up because they don't have to move out, you
Right.
know? And so there's lots and lots of great things that come from this. But professionals like you that are out there operating, um, that's the change. Like those are the people, and
Hmm.
we're all going to get better, and we're all going to learn more. And you're going to call me up and say, like, literally, you said something that made me. You asked how I find where I want to go. I have a deal that's a good deal in Compton right now. But you just said something, and you're like, I'm not going to buy it. I don't need.
I don't work with Compton City, and you can try, okay, but it's a
No. But I'm like, I don't need the brain damage for something I
yeah,
don't need to scale
yeah,
in that market. So somebody
yeah.
else can buy it. That's great.
Yeah,
But
exactly. I learned a long time ago, just don't mess with Compton. And maybe they've gotten a little bit better, but I choose not to because to your point earlier, why would I spend my time and energy and money into a city that I know I'm going to have a lot of friction with?
yeah,
Let me just go and work in another area where I know things are, working a lot better and a lot more streamlined. But a lot of what you said, I resonate with. I'm very passionate about what I do. I'm very grateful in the position that I'm in. I think I'm in a space where I really enjoy what I do for a living, and I really value like the time and energy that I put into educating others because that's really what we're doing. We're helping others, by sharing what's working, what we're doing actively in the market, and nobody's going to work harder than you are. Gary Vee talks about it all the time. Like, you can't expect for your employees to work 10, 12 hours a day and be as invested and as motivated as you. That's just not going to happen, right? Like, you're
yeah,
the owner of the company, you wear the hat, you take that leadership role, and you have to be the one that's highly invested in every aspect, which means innovation, understanding the law, like putting in those dark hours, right? That Hermosi talks about, like early in the morning, late at night, and just being very obsessed with the concept itself, because you have that vision.
yeah,
And I'm sure a lot of it has to do with proximity too, right? Hormozi
sure.
hangs along with his wife and with Sharav, right? Like,
Right.
there's a reason why they're in partnership. They didn't just stumble across the partnership.
No.
Like, it's been years in the making because he's seen their growth and has been part of their growth since gym launch, right? And
Yeah,
probably even prior to that. So he's seen them. And so while Sharav was building his billion-dollar empire for the second time with Real, he was also watching them, and I'm sure they bounced off of ideas with each other. And look at where they're at now. And I feel like I know that you and I will at some point do something similar because we're very passionate about what we do. We're in the same world, right? Of,
yeah,
of, of building and housing. And so I think by default, I mean, I've done a lot of business with a lot of the people that I've had on the episodes, which has been
yeah,
really cool because that was part of the reason why I decided to do the podcast, was to bring advocacy around ADUs, around housing. But most importantly, I wanted to have highly vetted people come on, exchange numbers, talk to them, and then, by connecting with people genuinely as a human to human, business came about it very organically and very naturally for me.
yeah. I, I feel that.
Yeah.
Well,
Well, we were going to talk about a whole bunch of other stuff, but it's been an hour and 16 minutes now. We're going to have a part two at some point because I think for the next call, maybe it'd be cool to showcase some of my projects, some of your projects, and maybe, like, I don't know, share with people some of the things that we learned through those projects. And we wanted to talk to you guys also about 1031 exchanges. I have a couple right now that I'm working on where they want to do a 1031 exchange to another investment property that has a lot of ADU potential. But, after today's discussion, it would also be a bad idea to start talking about some of the other bills that you're implementing and talk to these investors. But we'll have to have a part two for the 1031 exchanges and then partnerships as well.
yeah,
But if someone, listening to the episode is interested in investing and wants to understand, the returns, understand your strategy more in depth, how can they connect with you and reach out to you?
yeah. I mean, the best way is either through LinkedIn, just Jared Jones on LinkedIn, or on Instagram, Middle Housing Partners. Um, and then we have middlehousingpartners.com as our website. But those are the best ways to connect with us. And yeah, we're always happy to chat about a scenario where, talked about the 1031. We've got a guy 1031ing $2 million in right now with us, and that $2 million will end up in a year and a half to 2 years, turning into like $5.5 million in equity that he is keeping, and he'll have his cash back, right? So there's some really cool ways that you can leverage these opportunities as an investor that maybe has a rental property that's kind of crappy, but you got a lot of equity in it and you don't really want to own it or operate it anymore. And so how do you get that money back tax-free? Well, there's a way. And it's through operators like Stephanie and myself that these kinds of things can be done.
There you go, guys. I put up his website here, and I'm also going to have it down below. He's very active on, like you mentioned, LinkedIn, Instagram. I love the LinkedIn posts, by the way. I'm always seeing them. And
Yeah.
definitely Instagram. Are you guys on YouTube as well? Or
no, I mean, that is something that we're going to work on. So I'm going to have you on my podcast when I launch it.
awesome.
We're going to be doing that soon, but with a large focus on family offices and a large focus, on investor operators. So
amazing. All right. Well, I'm excited to be on. Thank you for being on mine today. I really appreciate your time. I know a lot of people were excited for this episode, and I hope you guys got a lot of value from it. And I hope that some of you also reach out to Jared, and you guys will see us around. I'm sure we'll collaborate, maybe do more calls, some Zoom calls, or I could join your mastermind as well, which sounds amazing. So I'll definitely connect with you on that. And yeah, we'll see you guys on the next one. Thank you so much.
take care.